Okay, according to Benjie, AMC Moass is here. It is here.
Why betting against AMC is a bad idea. Let's check out this new article from the streets. This year, a cinematic battle has been playing out on the stock market. On one side are large hedge funds, and on the other are shareholders of AMC holdings known as the APES. The ape army has been winning, and hedge funds, which have been shorting AMC stock, have taken some pretty serious blows. Why the Anchorage Capital hedge fund crash? The New York-based hedge fund Anchorage Capital Group has shut down after more than 18 years of capital management. Anchorage Capital had 4 million put options on AMC, which accounted for 17.8% of its portfolio.
Okay, 4 million put options. That's not short interest. Not the same as shorting. You guys know that, right? Right, yeah, of course you do.
The hedge fund was also betting against other so-called meme stocks like BlackBerry, Bed Bath & Beyond, and even GameStop. Anchorage Capital Group had the second largest short position against AMC stock. In the first place is Jane Street Group.
In first place is Jane Street Group, which currently has 4.3 million AMC put options. Okay, again, put options are not short positions. Essentially here, in a nutshell, put options are contracts that give the holder the right, but not the obligation, to sell 100 shares of an underlying stock at a certain price, the strike price, by a certain date, the expiration date, which, of note here, we don't know what the strike price or the expiration date was of these put options, because that's not indicated on 13F forms. It just tells you the amount of shares that are represented by those put options. But again, they're not short positions. That does not count in short interest. That has nothing to do with borrowed, shorted shares. That's not explicitly stated here either way. They can't be conflated together. These guys do it all the time. It's really annoying. It's misleading. Benjie does not clarify that. So those put options are essentially an insurance policy which protects the holder against a decline in the stock price. So you can sell the shares at a given price regardless of how low the stock goes. So if you have put options at $30 and the stock goes to $15, those put options have gone in the money, and on the expiration you can sell the shares. So to put an example on this and provide a concrete source, lest I get criticized for not providing a source, which is funny because none of these other YouTubers provide any sources for anything, but hey, whatever. I can provide sources, not a problem. Let's look at their supposed largest short position against AMC stock, according to this article. Jane Street Group. It says shares held or principal amount 4.2 million. Okay, so this is insinuating that they have a 4.3 million share AMC short position somehow via put options, which doesn't make any sense, but, you know, of course, we're dealing with the apes here. They don't understand. That's why I'm trying to explain this. Okay, so I went and looked up the Jane Street Group 13F filing that indicates this. So, you know, basically just Googled Jane Street Group 13F AMC, you know, and then you get some Fintel. So I click through that, and then I click through 13F here. That brings you to this Edgar page here, and you want to click on the information table right here, 13F info table, the HTML one. You click on that, and it will bring up the information table. This is the actual data, and then you could just search for Control F for AMC in here if you want, or just scroll down. It's a big document, so sometimes searching takes a minute, so just scroll down with the page down. And let's look at the headers here, the column headers. Just so we've got what is the name of the stock, what title, Class A, Common, whatever. The QSIP, that's basically a serial number, and the value, and that's given in thousands. Shares or principal amount. So for straight long shares, that's just going to be how many shares are held. For call or put options, which are the next column, if it indicates call or put, that's indicating an option position. But the option position is specified in the number of shares that are represented. So you need to divide that by 100. That would give you the number of contracts. Each contract is for 100 shares, but it's given multiplied out by 100. So everything's in shares. That's confusing to a lot of people, but I'll try to make it clear. So let's scroll back down to AMC. So we've got 4 entries for AMC highlighted there in red. Okay, we've got the 4 entries on the 13F highlighted. Let's look at the top and bottom entry. Those are long shares. So it's telling you that you have $7.7 million represented by 204,000 shares on the top line. On the fourth line down, you have 898,000 represented in 23,593 shares. So let's do a little bit of quick math here. So if we have 898, we'll multiply that by 1,000, get our value, divide that by the number of shares that are given, 593, 3806 per share. If we come over to Trading View, remember 13Fs indicate how many shares were held on a security at the end of the quarter. So pop quiz, what is the date of record for third quarter 13Fs? It's going to be September 30th. That's the last day of the third quarter. So if you look at that day, this is a daily chart. We look at this day here. You look up here at close. It's going to tell you what was the closing price on that day. Boom, it's 3806 right there, 3806. So this is correct. I mean, I'm just going through the numbers here to explain how it all fits together. Okay, so we got that value. So the top line is going to be the same exact thing. All that is the price that AMC closed at on the end of the third quarter. So it's going to be the same for all four of these entries here. Okay, so for puts, here we go for puts. So remember I said before, I don't know if they hold the long shares or not, but if they do, this is an insurance policy against them. It would allow them to sell the shares at a guaranteed price, even if the stock price went below whatever they paid for it. And by the way, this is not telling us that they paid 3806 for these shares at all. That's not what it's telling us. It's telling us what is the value of what they own based on September 30th price for AMC. So obviously we showed that 3806 here. That's what it's telling you. It's not telling you that they paid 3806 per share. It's just telling you that when it was 3806, this is how many they had. Think of it that way. So on those put contracts here, we're going to take that number, and I know we don't need to do this on here, but just to illustrate it, it's going to give us 42,539 put contracts, each that represent 100 shares. So multiply that by 100, that's where you get your 4.2 million. Now let's do the 161,903 times 1,000. That's going to give us the 161 million. And if we divide that by the 42,539, that's going to again give us 38,059 or 06. So everything's kosher there. So again, this is not short positions. 13Fs don't require the disclosure of short positions. Hedge funds and institutions do not have to disclose their short positions anywhere. Not on 13Fs, not anywhere else. Put option contracts are not short positions. I'm sorry, Benjie. I'm sorry, the street. That's confusing. That's misleading. And it's certainly not true. So they would have you to believe that Jane Street Group has the largest short position, and that 4.3 million put options, which is not even correct either. It's not 4.3 million put options. It's 42,000 put contracts that represent 4.3 million shares that could be sold. But remember, they have a lot more that are held on a long basis. They have almost 14 million shares that are represented by call contracts. So they don't tell you that. It's misleading. You know, you can't cover that in a 2-minute video. I would challenge Benjie to see if he even understands this. I have corrected him so many times on 13Fs, and when 13Fs indicate ownership, and every time I still have to correct it, whatever.
Which currently has 4.3 million AMC put options. Although a letter released by Anchorage Capital's fund manager didn't explicitly mention its disastrous AMC bets as a reason for its closure, it cited a cheap money environment in the markets that has pushed the stock and bond prices to higher levels.
Okay, so it says right there that it doesn't even mention AMC as the reason. That's not surprising. It's very much a stretch, all of this.
Anchorage Capital Return estimated $7.4 billion in assets to its clients. Short sellers lost billions on AMC. The latest report of SV Partners concluded that until early November, short sellers betting against AMC collectively lost $3.44 billion this year, even though a recent downturn in share prices helped short sellers to slight recovery of $20 million per day during October.
Okay, let's look at that on the chart real quick. So here I have the end of the third quarter, which happens to be the same date that we need for the next illustration here. So they say short sellers lost collectively this many billions until early November. Okay, so Here's early November. So again, that's fourth quarter. In the second half of September, you had the price decline from $52 to $35, roughly. So that's good for short selling. And you can assume then, and I hate to use that word, but you know, you have to kind of use some intelligence here to figure this out. It's not rocket surgery, but you can see that with this price movement going up here in early November, we can assume that that's a little bit of short covering because they're taking profits from this higher level down to this lower level here. I mean, you're talking $15 per share. They're making $20 million a day. So, you know, I'm not going to do the math, but, you know, that's not unreasonable. And it says right here that they started making money. So APES, you're going to have to accept the fact that shorts have been covering right under your nose, and because you are so stubborn and don't want to understand how this works, you just dismiss it, and I'll get flamed and, you know, criticized and whatever, ridiculed. I don't care. I'm trying to help you understand this, and, you know, whatever. If you don't want to respect me or the truth about what's happening here, whatever, it doesn't matter.
With the stock down 35% since October, though, it's likely that the next update will reflect better numbers for short sellers.
Okay, so with the stock down 35% since October, yeah, here's that. So here's the October high to where it's at right now, where it closed on Friday, is right at 35%. So yeah, that's correct. That's another good amount of profit to capture in a short position. And that, you know, that jives with what I was saying yesterday, which was that on Tuesday, the price was in the low 20s, which have not been seen since May. You know, I feel like I'm just repeating myself over and over with this crap, but, you know, people don't want to listen. You didn't have that price level since May 27th, you know, and you have short positions come in. Of course, they're going to cover some short positions when it gets down that low. Of course, you're going to have a bounce because you have short covering, which is the same thing as closing short positions, apes. It's the same damn thing. Quit trying to argue semantics and actually try to understand the process.
It's likely that the next update will reflect better numbers for short sellers. The planet of the apes, AMC's ape army, is the biggest strength though. These bold shareholders have vowed to buy and hold the stock no matter what. Even though AMC stock isn't as popular as it might have been a few months ago, as far as you see activity on Reddit forums, etc., it still remains highly shorted at currently around 21%.
Currently around 21%. Well, the article says 16, but I wanted to look at the article myself, so of course there's no link. But there's all kinds of other links to things that you can buy from him. You can pay for his Discord. You can become a member of the channel. You can buy his option trading course. You can, you know, blah, 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 but he doesn't give links to the sources he uses. By the way, I do, and I will. I got a link to this in the description of my video. I'll provide it. He doesn't want to. Fine. December 17th. So the article's from Friday. You couldn't see that anywhere on his video. He didn't show you. Beginning, he cut off the date, which is not surprising. They cut off dates and sides of articles and columns and shit all the time because they don't want you to really see it. But this is from Friday. So Friday, it was said here that the short interest was at 16.2%. He went ahead and updated it with Ortex's updated number of 21%. Good.
The meme crowd is extremely hard to predict, but luck appears to be on their side. Any bullish spark could be the catalyst to bring AMC to all-time highs, which we could be seeing sometime next.
All right. So, well, was that the end of the article? So that is the end of the article. He didn't skip out on it early. Fine. So I went ahead and found another article by the same author from last week as well. It's from December 15th. And this one's titled, GameStop and AMC stocks keep dipping. Who's to blame? Meme stock, blue chips, GME, and AMC have fallen nearly 20% in the past 5 trading days as bears have taken over. Wall Street Memes discusses the possible causes of poor momentum. So this is Wednesday, 2 days before the article that he read came out. Let's get down to, it talks about Adam Aron selling, dark pool trading, and naked short selling. Okay, pay attention here. Various theses about stock market manipulation and the SEC's lack of proper regulatory power are discussed daily on the main Reddit forums. Dark pools and naked short selling are the alleged mechanisms used by bears to prevent GME and AMC stocks from achieving massive gains and delay the so-called mother of all short selling, or Moass, or how about mother of all short squeezes? Yeah, it's weird. However, these theories have yet to be proven true. A few months ago, the SEC published a report on GME's trading activity in January, when shares soared as much as 1,800%. The study shed light on what happened and drew conclusions on the causes of the early 2021 rally, significant Reddit mentions, media coverage, increase in trading volume, and, to a lesser extent, elevated short interest. Beyond the above, one could only speculate if matters of market structure, restricted trading, digital engagement practices, payment for order flow, dark pool trading, and the market dynamics of short selling may have played a role in pushing GME and AMC lower in Q4. The SEC has stated, at least, that it will continue to look into the issues. So I don't want to call this proof of anything because, yeah, this is still a media article. But the point is just that, okay, Benjie pulled out an article by, what is this guy's name? Bernard Zambonin. He pulled out an article by Bernard Zambonin that, seems to be bullish in nature. Although it's bullish in a reserved way, I think. It's not super bullish like the APES. 2 days earlier, this article came out, same author, and it says a lot of the same shit that I've been saying, that other people have been saying, that, you know what, show me the evidence of naked short selling. There's no evidence. None has been shown, none has been given. It's an assumption made by people who want to believe it. They want to believe that their stock is being illegally manipulated. Well, that's great, but there's no evidence for it. So what about the dark pool issue? Well, so Benjie doesn't have a promotional for Webull or Moomoo, but when you see those Webull and Moomoo promotional segments that they do, those are payment for order flow brokerages. They're promoting payment for order flow brokerages on a daily basis. Finance News does it. Practical Investing did it. There it is, Moomoo right there. Here's Finance News with the Moomoo, 5 free stocks. You see it all over the place. Well, those are payment for order flow brokerages, and these guys are promoting them so they can get their free stocks or whatever. They can get their side of the deal. I'm not going to comment on the merits or disadvantages to dark pool trading. There are things on both sides of that. It's not like it's unregulated, and it serves a purpose. Actually, it serves many purposes, different purposes. When you say dark pool trading, that is a general term that incorporates different types of off-exchange order execution. A lot of retail investors are willingly, maybe knowingly or not, but they are using payment for order flow brokerages that are executing their orders off-exchange. So, and then they're turning around and bitching about it like as it's some kind of problem. Well, then don't use it. Use Fidelity. Route your order to the lit exchange if you want to do that. It doesn't matter to me which one anybody uses. It really doesn't. The main thing is the price that your order is executed at. Are you getting a good price that you can be profitable at? Yes? Fine. Good. Then do that. Trade, be profitable. But, like this article said, like the second article I looked at here said, it's yet to be proven. There's no evidence that it actually, none of these things are the reason why you're losing money. Period. It's not because of payment for order flow. It's not because of dark pool, and it's not because of naked short selling. It's debatable as to whether it's even because of short selling in general, but I don't really want to go there right now. So anyway, we got anything else here in this video?
Appears to be on their side, which we could be seeing sometime next week now. But if you see 2 all-time highs to be on their side, any bullish spark could be the catalyst to bring AMC to all-time highs, which we could be seeing sometime next week now. But if you want to
that last part's not in the article. Well, there you go. I got the link to this article that he looked at and the other one that I looked at, as well as the Jane Street 13F. And I think those are the only resources I used in this. I got links to all 3 of those things in the description. So check them out. Do your own due diligence, and that means you might have to go to other sources and verify things too. You might have to look up 13Fs and get a better sense of what the everything is and how to calculate these things. Well, that's part of it. My job here is to react to what these influencers are saying, fact check it, and get you started on the path of being able to do that research yourself. I'm not going to wipe your ass for you. But I understand a lot of people have not done a lot of this research. So I'll get you started on it, but to criticize me because I'm not giving every source for everything that I say, well, that's your right, but you're missing the point. you're missing the point. I'm not going to wipe your ass. So anyway, thanks for watching. Enjoy your Sunday. See ya.